In this video, we are going to talk about the top 5 ways to reach financial freedom. So before starting this video, please like this video and subscribe to our channel for future updates. Financial freedom means you get to make life decisions without being overly stressed about the financial fallout of those decisions. That's because you're financially prepared for whatever life throws your way. You have no debt, you have money in the bank, and you're investing for the future. Here's a list of the top 5 ways to reach financial freedom. Let's start. Number 5. Learn how to budget. You won't get ahead if you don't have a plan for your money. Instead, you'll find yourself wondering where your money went at the end of every month. That's not financial independence, that's a recipe for financial disaster. Financial freedom is impossible if you're not living on a budget. You've got to tell your money where to go, or you'll end up wondering where it went. Give every dollar an assignment before the month begins and track your spending throughout the month. If you consistently overspend or underspend in certain areas, you can always adjust the amount in those categories. Budgeting is important to get your finances on the right track, but it doesn't end there. Even once you achieve financial freedom, you'll still complete a unique budget every month. No matter how much money you have, you need a plan. No one wins the big championship game by accident, and you won't get to financial freedom by accident either. Number 4. Get debt out of your life for good. If you have debt like credit cards, student loans, or car loans, it's time to kick it to the curb. Why? Because as long as you're sending hundreds of your hard-earned dollars in debt payments to banks and lenders every month, you'll never truly experience financial freedom. Your income is your most powerful wealth building tool. And you won't reach your money goals if all you've got to work with are bits and pieces left over after you pay credit card bills and student loan payments. Paying off your debt helps you lay a foundation to build wealth that will last. Make sure you have $1,000 saved and put aside for emergencies before you start tackling your debt. You don't want an unexpected expense to derail your progress. Number 3. Set financial goals. Everybody dreams about achieving financial freedom. It's a great dream. But a dream without a goal is just a wish. That's why setting financial goals like getting out of debt or saving up for retirement is so important on your journey to financial freedom. They give you something to work towards. How do you know if you have a good goal to go after? Here's how to set goals that work. Let's say you want to get out of debt. That's a fantastic goal to have, but that's not enough. How much debt do you want to pay off? Is it $20,000? Good, now we're getting somewhere. When do you want to be debt-free? How does 12 months sound? Done, and just like that, you now have a specific, measurable goal that's personal to you with a hard deadline attached to it. I want to pay off $20,000 worth of debt in 12 months. Now all you have to do is write it down and keep it front and center as you go after it. Number 2. Be smart about your career choice. As we said before, your biggest wealth building tool is your income. So, when it comes to choosing a career, there's a lot at stake. Don't stay stuck at a dead-end job, especially if it's making you miserable. Find a job you enjoy that also supports your goals of financial security so you can enjoy the journey. Is there income, earning potential? Even if you're not making your dream salary from the start, make sure there's an opportunity for your income to increase as your value increases. Your choice of career can have a big impact on your long-term financial plan, so take it seriously. Number 1. Save money for emergencies. If your goal is financial freedom, you need a fully funded emergency fund. It acts like a buffer between you and the unexpected life events that happen to all of us, like car repairs, broken appliances, and medical deductibles. That's why you should increase your emergency fund to cover 3 to 6 months of expenses once you're out of debt. That's it for today. We hope you found our video interesting. If you did, please give it a big thumbs up and share it with others. Also, if you haven't already, please consider subscribing to our channel. Don't forget to turn on the notification bell so you don't miss any of our new uploads. In the end, thanks for watching, and see you next time.